So what is the difference between cash-based accounting and accrual-based accounting? There is a significant difference. For starters, which one is better? It depends. I think accrual accounting makes more sense. And then depending where you live, maybe you're able to do cash accounting, maybe you're not. So that's an important factor. But what is the difference between the two? Well, the way I like to look at it is cash accounting for me is kind of like blind accounting, where you don't record anything until you physically feel the money moving. So it's like, you can't see anything once that rent money comes in or that expense goes out, and you can actually feel that money moving. That's cash accounting. So for example, if you're renting office space and you're paying $1,000 a month to rent that office space, and you're paying at the first of the month, on the first of the month, you physically have that money moving out, or it could be digitally now, but you can feel that money leaving your account. So in cash method or cash basis accounting, you would then count that as an expense on the first of the month as $1,000. And then on the side of income, let's say you had a client, you did a job for them for $2,000 and you finished it on, let's say January 15th, and they don't pay you until February 5th, you receive the money on February 5th, that's when you count it as income rather than January 15th when you actually finish the job. So again, it's like you don't actually record the transactions until the money moves. So that's kind of a brief explanation of cash accounting. I don't really like cash accounting because it's not true. It's not true to when the expense actually occurred or the income was earned. It just has to do with when money changed hands. But money can come in late, money can go out early, and so I prefer accrual accounting for that reason. And so then just to explain accrual accounting means you record the transactions when they're actually earned. So in that example where you finished the project on January 15th, it doesn't matter when the money comes. You record that on January 15th as completion of the project, and you are being owed whatever that was, $2,000 for completing that project. Even if the money comes in 2 months later, on your records, you should report that that's when the money came in, but it's registered as revenue on January 15th. And now from the expense side with accrual accounting, let's say you're paying that office rent of $1,000 per month on the first of the month. You would record on your books that it was paid out on the first. That's when you made the transaction or paid for the expense. But technically it's kind of a prepaid expense because it's to cover the remainder of the month. So you paid $1,000 up front, but that's gonna last you for the whole month. So on a balance sheet, for example, if you're looking at your balance sheet for the first of the month, when you just pay that $1,000 expense, it's going to be considered a prepaid expense because that's not fully used up until the month is over. And then for another example for accrual accounting for expenses, let's say that you have a cell phone for your business and the cell phone bill was due, on the 10th day of the month, but you don't end up paying it until the 20th, so it's 10 days late. Well, with cash accounting, you would only record it when you actually pay, whereas with accrual accounting, you record that as an expense the day it's due. So you would have, expense outstanding that you have to pay, whereas with cash accounting, you wouldn't consider it that way. You just wouldn't record it until the money physically moves out of your account. So there are significant differences. Again, I don't really like cash accounting because it doesn't really feel like it's a true picture of what's going on. It's just a picture of the movement of money. And again, for which one is better, it depends. My opinion is accrual accounting just makes more sense, but there might be advantages to using cash accounting if you are able to do that, and that would depend on your jurisdiction. So you want to check with local governing bodies, tax bodies, check with qualified accountants to see what makes most sense and see what you're allowed to do. So hopefully that made some sense and was helpful. If you like the video, please click like. You can subscribe to the channel and check out my other videos where I have dozens of other videos on the topics of business management and business startup. And if you have any questions, you can just leave them in the comment section below and I can answer them there or even turn them into a video.